intellectual self-care, investing in knowledge assets, outperform traditional stock markets. Introduction: the investment most people overlook. When people talk about investing, they almost always mean money, stocks, bonds, real estate, index funds. The vocabulary of investing is almost entirely financial. And while financial investment is genuinely important, there is a category of investment that generates returns that no stock market can reliably match, that is almost universally underestimated, and that is available to anyone willing to commit to it. That investment is knowledge. Not knowledge in the vague, general sense of read more books and watch educational videos, but specific, strategic investment in knowledge assets, skills, frameworks, credentials, and intellectual capabilities that have compounding value in your professional and financial life. This audiobook is about treating your intellectual development with the same rigor, intentionality, and strategic thinking that sophisticated investors bring to their financial portfolios. It is about building knowledge assets that appreciate over time, that create compounding returns, and that position you to capture economic value that generalists and passive learners cannot access. Chapter 1. Why knowledge is the superior asset class. Let us examine the case for knowledge as an asset class. To do this, we need to understand what makes any investment valuable. The best investments share certain characteristics. They appreciate over time. They generate returns that compound. They provide some protection against inflation and market volatility. They create barriers to competition. And they offer asymmetric upside, meaning the potential gains significantly exceed the potential losses. Knowledge assets, when chosen and developed strategically, possess all of these characteristics: appreciation and compounding. Unlike most financial assets, knowledge does not depreciate through use. In fact, it often appreciates. The more you know in a domain, the faster you learn new things within that domain. The frameworks you develop become more refined with application. The connections between ideas multiply as your base of knowledge expands. This is the compounding effect of intellectual investment. Each unit of knowledge makes the next unit easier to acquire and more powerful to apply. The person who has invested 10 years in developing expertise in a domain does not just know 10 times more than a beginner. They think differently. They see patterns that are invisible to beginners. They can solve problems in minutes that would take others days. Inflation resistance. Financial assets are subject to inflation. The purchasing power of money erodes over time, but the value of rare, specialized knowledge tends to move in the opposite direction from supply and demand dynamics. As the complexity of the economy increases, and as automation absorbs routine knowledge work, genuinely rare expertise becomes more, not less, valuable. The knowledge worker who has invested deeply in developing capabilities at the frontier of their field is not competing against automation or commoditization. They are, by definition, ahead of it. Barrier to competition rare. Deeply developed knowledge creates a natural competitive moat. It is much harder to compete against a genuine expert than against a generalist. Expertise takes years to develop. It cannot be quickly replicated by a competitor or automated away by software, and it commands premium pricing, precisely because supply is limited. Chapter 2. The anatomy of a knowledge asset. Not all knowledge is equally valuable as an investment. Understanding what makes a knowledge asset genuinely valuable is the first step toward building a portfolio of them. Depth over breadth. Shallow knowledge of many things has limited commercial value in the modern economy. The internet has made surface-level information abundant and cheap. What remains scarce and valuable is depth. Genuine, layered, sophisticated understanding of a specific domain. The knowledge investor who develops true expertise in a narrowly defined area will consistently outperform the generalist. Not because generalism has no value, but because depth is where the premium pricing and competitive moats live. Adjacency and integration. While depth is the foundation, the highest value knowledge assets often sit at the intersection of two or more domains. The person who combines deep technical knowledge with sophisticated communication skills. The analyst who combines quantitative rigor with strategic intuition. The marketer who combines deep psychological understanding with data analytics capability. When you develop expertise that bridges domains that are rarely combined, you create a profile that is genuinely rare and therefore highly valuable. Most people deepen in one direction. The strategic knowledge investor cultivates adjacencies that create unique value, transferability, and leverage. Some knowledge is highly context-specific. It is valuable in one role, at one company, in one industry, but does not transfer easily. Other knowledge is broadly transferable and applicable in multiple contexts. High-value knowledge assets tend toward transferability. They can be applied across multiple contexts, which increases both their utility and their leverage. A skill that makes you valuable in any industry is more valuable than a skill that makes you valuable only in your current role. Chapter 3. Intellectual self-care as strategic practice. The concept of self-care has been largely captured by the wellness industry. Rest, relaxation, skincare, healthy eating. These are valuable practices, but they represent only a small fraction of what genuine self-care looks like for a high-performing professional. Intellectual self-care is the practice of actively investing in your mental and cognitive capabilities with the same intentionality that you bring to physical health or financial planning. It includes deliberate learning, but it also includes the conditions that make effective learning possible: adequate cognitive rest, exposure to challenging and diverse ideas, regular practice of your core skills, and the cultivation of environments that stimulate intellectual growth. The Learning Investment Framework. Strategic intellectual investment begins with a clear framework for where to direct your learning energy. Start with your current strengths. The research on expertise development is clear. It is more effective to deepen existing strengths than to develop entirely new capabilities from scratch. What are you already genuinely good at? And where is the frontier of that domain? Identify the knowledge gaps that constrain your performance. Every professional has areas where limited knowledge is constraining their results. What would you be able to do differently if you understood this better? What decisions would you make more confidently? What opportunities would you be able to capture? Look for knowledge at the intersection. Where can you develop expertise that bridges to valuable domains that are rarely combined? These intersections are often where the most valuable and defensible knowledge assets live. The deliberate practice principle: not all learning is equally effective. Passive consumption of information, reading articles, watching videos, attending conferences, builds awareness but rarely builds true expertise. Genuine expertise develops through deliberate practice. Active, effortful engagement with the material at the edge of your current ability, with immediate feedback and focused attention. This means working through challenging problems, not just reading about solutions. It means seeking out feedback on your work from people more skilled than you. It means deliberately practicing a specific skills you want to develop, rather than simply going through the motions of familiar tasks. Chapter 4. Building your knowledge investment portfolio. A well-constructed knowledge portfolio, like a financial portfolio, is diversified and strategically balanced. Core holdings. Your primary expertise. Your core knowledge holding is your primary area of deep expertise. This is the domain in which you are developing genuine, differentiated capability. It should be the area that receives the most consistent and serious investment of your learning time. Think of this as the index fund equivalent of your knowledge portfolio. It is the reliable, long-term investment that forms the foundation of your professional value. Growth positions. Adjacent skills. Your growth positions are areas adjacent to your core expertise where you are developing complementary capabilities. These are strategic bets on where additional knowledge will multiply the value of your core expertise. The communication skills that make your technical expertise accessible to executive audiences. The business strategy knowledge that allows you to apply your functional expertise to organizational decisions. The data literacy that enables you to make more rigorous arguments about your domain. Speculative investments. Emerging domains. Every portfolio benefits from some speculative positions. Emerging technologies, new methodologies, developing fields where early investment will compound enormously if the field grows in importance. These require more tolerance for uncertainty. Not every emerging domain will prove valuable, but for the knowledge investor who chooses thoughtfully, early investment in an emerging area can create first-mover advantages that are extraordinarily valuable. Chapter 5. The returns on intellectual investment. Let us be concrete about the kinds of returns that intellectual investment generates. Income premium. Deep expertise commands premium pricing in every professional context. The specialist earns more than the generalist. The recognized expert earns more than the capable practitioner. The person who is genuinely irreplaceable in their domain commands compensation that reflects that irreplaceability. Research consistently shows that investment in specific, valuable skills generates one of the highest returns on investment of any asset class when measured in terms of lifetime earnings impact. Opportunity creation knowledge. Assets create opportunities that are invisible to those without them. The expert who understands the cutting edge of their field sees opportunities that others cannot see. They recognize needs that others have not named. They can propose solutions that others cannot conceive. This opportunity creation effect is one of the most valuable and least quantifiable returns on intellectual investment. The door that opens because of what you know. The project you land because of a capability you have developed. The career pivot that becomes possible because of expertise you have built. These are often transformative in ways that compound indefinitely. Resilience and optionality. A well-developed knowledge portfolio creates resilience against professional disruption. When a role becomes obsolete, when an industry contracts, when a company fails, the person with highly developed and transferable knowledge assets has options that others do not. This optionality has real financial value. The ability to pivot, to find new applications for your expertise, to create opportunities in new contexts, protects against a financial vulnerability that comes from narrow professional positioning. Conclusion. The knowledge investor's mindset. The intellectual self-care practice described in this book, it's not about consuming more content or adding more books to your reading list. It is about approaching your own intellectual development with the same strategic intentionality that a sophisticated investor brings to a financial portfolio. It is about understanding which knowledge assets are most valuable given your current position and your long-term goals. About allocating your learning time deliberately rather than casually. About pursuing depth, where depth creates competitive advantage. About cultivating adjacencies that create unique value. And about maintaining the cognitive conditions that make effective learning possible. The knowledge investor who practices this approach will, over a career, Accumulate intellectual capital that generates returns that no stock market can reliably match. Not because markets are bad investments, but because the returns on genuine expertise, compounded over decades, are extraordinary. Invest in what you know. Invest in what you can become. That is the asset that pays dividends for a lifetime.